All right. Good morning, good afternoon, good evening, wherever you are in the world. Welcome to MolarGold Monday morning weekly analysis. All right, so today, what are we going to do? It's been a while. I've been on the charts after these moves. Okay, yeah, I was actually busy giving a lot of signals within the past few weeks. So last week I couldn't do the sessions for the Molar Gold. Today, let's get into it. All right, so gold has actually been in a kind of upwards move, strong momentum, and not giving any single retracement or corrections or whatever, and it just keep going up. At this point, what is visible to us is we have this blue degree with one, this blue with two, with three, with four, and with five completed. So this blue degree is completed, and now we need this red degree with one, with two, all these to be with three of the red degree. So what are we expecting? What are we expecting? Now that we are seeing a suspected with three, we are thinking that gold should give us a kind of correction, okay, some kind of correction around these levels. So gold should give us some kind of correction here like this, or preferably gold would do something like that. One, two, three, like this, and then we start the continuation. So then this becomes the wave 4. But the size of this wave tells me that this wave should also be a little bigger. Okay, it shouldn't be small with the size here. So with this size here, we should expect some kind of a bigger correction, a bigger one, before we continue to the upside. Okay, that's what I am seeing. So um, don't forget that fundamentally gold should continue the up move. Okay, fundamentally gold should continue the up move. But with us, we move with all the two. Okay. Nanayao says, good morning, Doc. Hope you're doing great this morning. More fire, Nanayao. I'm doing better than before. Guys, give me a lot of laughs. Let's keep the house on fire. Greg says, good morning, Doc. Good morning, Greg. All right. So this is what we should be expecting. Since gold is actually have done this kind of correction right here, 1, 2, 3, right here like this. In fact, 1, 2, 3 like this. This looks like a zigzag pattern. So we should see some kind of a flat pattern like this right here, and then price should continue. Okay, so we'll be expecting some big correction, big one here. We should be expecting correction, a big correction somewhere here. Okay, so likely gold can be doing some sells. We will trade in all of them. Which one that comes, we will trade, because we understand that gold would fly with the fundamentals. Okay, so if gold is flying with the fundamentals, if we get a sell, we will take the sell, because technically it should sell, fundamentally it should buy. Okay, so gold can do a sell, after that it will do a buy. That's what likely is to happen. 100%. Okay, 100%. That's what it should happen. Because technically, gold have to do some corrections. After done with the correction, we'll continue to the upside. Okay, but if we don't get that, all right, and it continues to go to the upside, we don't have a problem. We'll still buy. So here we would be doing both buys and sells. That's what we have to focus on. But don't forget that we have this with 4. After we are done with this with 4, we should continue to the upside, complete the last cycle, right? Probably that's our last cycle, I guess so. Okay, we should complete the last cycle. And if we are done with the last cycle, sorry, if we are done with the last cycle, gold should continue, or gold should start a kind of a sell move. All right, so this week we will look at both sides of the market. We are just not looking at one side. Looking at this small correction, it should drop. Then we get a kind of zigzag pattern right here. I've actually explained what a zigzag pattern looks like in our last educational post. So then gold should continue like that. Let's move into the higher time frames first. First, I'll move into the higher time frames before I'll come to the lower time frame, even though we focus more on the lower time frames. You remember I told you guys that gold should do a triangle like this, and then we start the sell from here. Then probably like that. Then we get a big correction like this, ABC correction. Okay, let me draw it well. So 1, 2, 3, 4, 5. Oh, sorry, 5. So we're expecting a correction like this, and then we'll go back up, or probably we will do down like this to this level, and then we start going back up. Now the structure has changed. Undo. Now the structure has changed. So since the structure has changed, what are we looking at? This is a 5 wave, 1, 2, 3, 4, 5. So this can actually be a higher degree with 1, and this is a higher degree with 2, right? Then we had a correction with A, with, sorry, Ctrl Z, with B, and then with C. And this starts a new cycle. So probably with 1 of another degree, 2, and then we are going with 3. Okay, now there are so many possibilities. But what we are sure is that the move we are looking at is impulsive. With all the possibilities, the move that we are looking at is impulsive. So the move is telling us that we should continue the up move. Okay, because we are not yet done. If this is with 1 and this with 2, all this is with 3. With 3, we should move higher. All right. So if that is the case, then we are not done. Nothing is done here yet. We are not done. Nothing at all is done here yet. Okay, we are not done at all. So we should see gold to continue. Probably to 1.618 Fibonacci expansion, so that when we get there, we will start to think of with 4. Okay. All right. So now we have seen the move in the higher time frame. Let's squeeze it to watch it clearly. The reason why. This with 1 right here, this with 2 right there, with 3, with 4, and this with 5. So if that is the case, with 5 started with a 5 wave, which this one is 1 and that is 2. Then we continue with 3, with 4, and with 5. And since price does not move in a straight line, we should expect other stuff like other wave counts in there. We should expect them. Okay, so basically, we have to be very, 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 um, we have to be very, very, very cautious because price is also at all-time highs, and since it's at all-time highs, it's likely that we can start having some sales. Okay, but we don't just see or trade any kind of things. Now the breakdown. The breakdown. This is a five wave with one, with two, with three, with four, with five, another five wave. Then this is also another five wave. So it means that we have two different types of waves inside this particular wave. These two different type of wave. And what is that? The first one is this wave one of a degree. I told you. Now the wave one and this wave two. And this another wave one of another degree wave one, and all this is wave two of another degree. Okay? Wave two of another degree. Alright. And then we've started with 1, with 2, with 3, with 4, with 5. Are we completed? With this size, I don't know. Unless I check with the Fibonacci's to confirm. So that I'll know that, okay, we are done with this first cycle, which is done. And we are left with this cycle, which is yet to be done. And then we are left with this bigger one. Okay? So now we have so many possibilities running out or playing out. So if you are trading the waves and you get to some levels like this, sometimes it becomes so confusing and so subjective. All right. So it's really hard for you to watch and predict. You know the direction, but you don't know what is following what. Okay. But what we will do is that we will trade the pieces, and the pieces is what will help us. That is why I said we'll focus on the smaller time frame. Okay. Now the smaller time frame would help us to understand what is actually happening, right? Because we have the direction. We know the direction, that the direction is a buy. But before the buy, what will happen? There are some small stuff. Now we have this move with 1, we have that move with B, or with with A, with B, and then with C. Okay, so this becomes like a zigzag kind of structure. All right, something like this, and then we will go back up. Okay, in the going back up, price can equally do this and then do another one like this. Then we get a bigger correction like that. Then we get with A, with B, and then with C. Then price can go back up. So when we are making the corrections, also don't forget, keep this in mind. Okay, the charts will tell us. They always tell us. Akin said, "Good day, Doc. You are saving lives. Thank you." Justice says, "Good morning, sir. Thank for this session. Thank you too. It's always a pleasure doing this." Right. So, we take this trade. If we take this trade, we look at a sell. Always watch the momentum in the prices or in the charts. If this sell is not pushing so far, then you know that when they get exhausted, they will push it very hard. Okay, they will push it really, really hard. And if they push it really hard, then price will drop again, likely. Then we get a bigger correction like this. Because I told you guys, the size of the correction in there, this size. Okay, so the size of correction here is nothing small. So these two things should also be big. Okay, it should be big enough. All right, so that we then know exactly. So this size would be responsible for something like this. All right, and if that is the case, we should expect sorry, we should expect this stuff, something like this will be accepted, and price can continue the upside. Now we know that gold is poised to go to the upside. So when we get any drop and then it corresponds with any structure, we can take the trade, and one of them will give us the money that we are looking for. So this week we will do more buys, but we focus also on sells. We watch the sells out so that we don't get trapped in the market, because price is actually at the extreme highs, all right, extreme highs, and a drop is needed. A drop is needed. Okay, guys, at this point, I would say bye for now. All right, catch you again on Wednesday. Dr. Mola here.